Hey everyone, welcome back to Upside Down Data. Today I want to give a bit of an update about ZIL. We haven't talked about ZIL in a while, so I thought it'd be interesting to revisit it during this current kind of crypto rally that we're seeing to take a look at its price action and some things that we can be looking at. So I want to start by talking about some of the models that we have here at Upside Down Data, some of our in-house models. So let's start off with a market direction classifier, or MDC. Now, if you're not familiar, this is a model that tries to capture bigger kind of macro moves to the upside or to the downside. So essentially it looks at the asset's price action and it generates a critical level that it thinks the asset needs to be above to be bullish, or if the price falls below it, it would then be bearish. And so the idea is that bull runs are characterized by being in the green, above the MDC, a heck of a lot more than you're in the red, and vice versa for bear markets. So more recently, ZIL has very much more been in a bearish footing than a bullish footing. But of course, with ZIL, one of the things I think is interesting to look at it now in this kind of pump that we're seeing in the crypto space is that ZIL was kind of the darling of the big, the kind of mini bull run, mini rally, not really a bull run, mini rally that we saw in the crypto space back in March going into April, right? ZIL, it's almost a kind of hilarious price chart when you look at this move to the upside, just vertical, this absolute explosion. Anyone who was a part of that was, of course, very happy. But since then, we really cooled off and actually went down, set in a new low relative to this local low back there. But now we've been charting a course back closer to the upside. Now, the one reason why, thing I do want to just note, one of the reasons why I like to look at the MDC versus some other indicators, that it tends to be able to catch these moves earlier than a lot of other indicators. So an example, one that I like to compare to a lot is the 20-week moving average. That's this purple line I put on. A lot of people will talk about the 20-week as being the gold standard for telling whether or not an asset is bullish or bearish. I respectfully disagree. I think the MDC does a heck of a lot better of a job telling us, at least giving us earlier warning when something's starting to look bearish and when it's starting to look bullish. You'll see this oftentimes, like for example here, MDC would have been telling you to be, getting really interested in ZIL here and get bearish here. 20-week barely registered that move at all. It just, it didn't update quickly enough. So that's why I like looking at the MDC. And so as I mentioned, we've just peaked our head above the MDC critical level, or at least we had a close above it. And we can zoom in on more recent price action to look at this more closely. So I'm zooming in now just from the beginning of 21 through today to look at the level. And we can see that we put in a close yesterday above the MDC critical level. And if you're curious, the level it's watching right now is 4.3 cents. Now we're currently just flirting with that line. The market's pulling back a little bit today. So the ZIL price has also pulled back a little bit. So it'll be interesting to watch to see if we can close above this level here. But we're at a point where being interested is certainly worthwhile because you can see some notable upside after closing green on the MDC. So we'll have to wait and see if follow through happens from there. But that's just one thing that from this model's perspective, we're at an area of very high interest right now that, it had been just bearish, not very much to see here. Now it's saying it might be worth starting to pay attention a little bit more. So who knows what'll happen, if ZIL could crash, the rest of the market could decide to really pull back here, and this could just be a fake out above. But if we can especially close today above this level, I'd be getting quite interested from this model's perspective. Of course, not financial advice. You should make your own opinions. But that's just what I'm seeing here. From this model's perspective, the possibility of some upside is, increasing because we've gotten above kind of a critical level from its perspective. Now, another model we can look at to get a bit more of a macro idea of what's going on here is the momentum bias indicator, or MBI. This is a model that quantifies momentum in the market, and particularly it's looking at the prevailing momentum. Is the momentum prevailing to the upside or prevailing to the downside? And so, 0 is kind of the average amount of momentum that's been in an asset throughout its lifespan. And then these are z-scores. So 1 would be one standard deviation above the mean. -1, which actually isn't even on this chart, but -1 would be one standard deviation below the mean. And so bear markets tend to be characterized by spending a lot of time in the red, very little in the green on the MBI level. And then bull markets are spending a lot more time in the green than in the red. And so you can really see kind of negative momentum pulling price down here, kind of chopping along sideways, negative momentum pulling us down, and then a lot of green through this bull run before really putting in a more bearish regime with this one extreme kind of outlier here, shooting well above one standard deviation above the mean during this insane rally that we saw here, where price basically just went, vertical. Tons of prevailing momentum in the asset there, but then that cooled off very quickly to reestablish a negative momentum bias somewhere around here, and then of course we saw a lot of downside ever since. So from this model's perspective, we haven't regained a positive momentum bias yet, right? And I think that kind of makes sense. Really, when you look at this price action so far, it's just been kind of chopping sideways. But what the MDC is suggesting is that, it's very possible we'll see some upside off here, some continuation on this run here. If we do, it'll be interesting to watch what the MDC does, right? If we can get up and reestablish a positive momentum bias and hold there, that might suggest that a little bit more of a prolonged rally might be in the cards. But if we just go up and get rejected back to the downside immediately, that might just mean that the bear market is just going to continue. And again, I think really ZIL's ability to do this are really dependent on the broader crypto market. Really this move here was catalyzed by some pretty major news, metaverse news for ZIL that really shot to the upside here. Unless there be some very specific kind of bullish catalyst like that would happen again, I really think that it's going to be dependent on what the rest of the crypto market does if ZIL can start to rally from here. And so that's what I think is going to happen, is that we're probably going to see that if Bitcoin, for example, could reestablish a positive momentum bias and hang out there, I think ZIL would probably follow suit and a more prolonged rally could follow. But if Bitcoin gets rejected soon, I would expect ZIL to get rejected soon as well. So there might be some short-term upside that could be seen after closing above the critical level here. Maybe we move back up some of these earlier levels before we have to roll over. This is a dynamic level as well, this critical level, so this likely would follow price up along with it as it goes, and then, basically when we fall below it, that'd be where it would signal bearishness again. We'll have to wait and see. But I personally think it's unlikely for ZIL to go ripping back to the upside like this unless there be a very specific catalyst that would cause that to happen again, or if we would see the rest of the crypto market really rally and just, everything would kind of the rising tide will lift all boats in that scenario. So still a kind of a generally bearish kind of outlook is the way I'm reading these data, with the possibility of some shorter term upside, which still could be reasonable, but I think it's unlikely we're going to rip back up, or especially rip to old time highs or anything like that. So the final thing I want to talk about here is that if we were to see a rally from current levels, we're just below the critical MDC level right now, but we have a few hours until the close, so it'll be interesting to see what happens there. But I want to pull up the volume profile and just say that if we were to see some upside from here, where are some targets we could look at for possible resistance? And one of the things that might be difficult for ZIL, and maybe one of the reasons it hasn't rallied more in this kind of mini rally we've been seeing in the crypto space, is that there's just going to be a lot of resistance. You can just see that a lot of volume has transacted at price levels down from where we are right now at 4 cents, really all the way up to 10 cents. Just even though if you just go back to the summer of last year, in the last year, tons of volume is transacted in these price levels, which means that there's a lot of cost bases that live in these price levels. So as we get up towards people's cost bases, they might opt to simply get out at break even, not risk holding for potential, more downside like we've seen in the past. We're really going to have to wait and see what happens there. But that's where I think there's just going to be a lot of potential sell pressure as we move up. That's where I think that ZIL really to start breaking up to these levels would need a lot of momentum, either from a specific catalyst of its own or from the rest of the market really ripping. And that would, I think, be the best case scenario for it to be able to move up here. I think probably the more plausible thing is that if the rally continues, if we're able to stay above the MDC critical value, moving back up to kind of maybe this general range. So maybe if we can slice through this resistance we built up here, back up to some of these price levels, where we had some transaction happening up closer to the kind of 6 to 7 cent range. That's probably about as far as I'd see this going if we saw some more upside, unless again we got a really major rally across the market or some other thing intervened. Now, if we also want to talk about downside targets, right? Let's say that we aren't going to really see some upside. Let's say the market rolls over here, and that one close above the MDC critical level was a fake out for ZIL. Where are some downside targets we could look at? So if we just zoom out a little bit more, look at some of the where the volume is transacted previously, going back to 2020, kind of late 2020, we can see that the next kind of big zone, if we kind of lose this zone here, is really down here in the 2 cent to about 1 cent level. And so that's where I'd see that, if we fall down and can't hold this local bottom as support over here, that would be kind of the more bearish scenario where I think we'd likely go before catching some support. So we're kind of at an interesting spot right now. I think we're really at a crossroads with us just having barely, close above the MDC critical price level, which, oftentimes that's a bullish signal, having closed above that. But again, I think that ZIL is not acting on its own. It's really going to depend on what Bitcoin does. So, the possibility of a fake out there is not, something we can just totally ignore. And so I think we're at a crossroads, and it'll be interesting to watch in the coming days exactly what happens. If we can, rally a bit, if we can kind of hold this 4 cent or 4.5 cent level, kind of get there and then move to the upside, that's when those higher targets come into play. But if we lose that level, then we're likely going to start seeing a move back down to some of these earlier levels as well. In kind of the better case scenario, kind of hold this as support, build up an accumulation zone here, and then bearish scenario, I would see us going down closer to 2 to 1 cents. So we'll see. I think there's an argument to be made for both in the short term. And again, the short term price action of anything is hard to predict, so we don't really know what's going to happen. But I think that there's, certainly ample evidence to pay attention. And that the possibility of at least some short term upside is quite plausible, but also we could end up just seeing some more downside as well. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. We'll have updates about our indicators and more over there.